For more insight, we welcome now Ed Stringham, President of American Institute for Economic Research, and Yelena Shulyatyeva, Senior U.S. Economist for Bloomberg Economics. Great to have you both. So let me just get started with you, Ed. Of course, investors at the moment seem to be taking the Chair Powell's comments as a done deal for a July rate cut. Would that be your take as well?
Yeah, so he was saying a half year ago we're going to keep going up in rates, and he's reversed course for a long time over the last few months, and really it's been more and more solidified. Maybe we'll cut rates. I think we're going to cut rates. It's probably going to happen that we're going to cut rates, and you can see that showing up in futures markets of implied probabilities of future rate cuts. You can also see that in forward guidance of Federal Reserve officials. So he's kind of eased into it. I think there's very little surprises given where he's been going with his talk.
Yelena, when we think about the uncertainty from trade situations and what the Fed can ultimately do, can we measure what a rate cut would ultimately do to take away some of that uncertainty for the economy?
Well, I don't think it's going to do that much in terms of economic growth. And, you can probably boost exports a little bit by just, lowering the dollar, and we did see a reaction in the dollar. You can probably push inflation up a little bit to closer to the 2% target, but really nothing in terms of the cuts can really do much for a broader economy. I think the key reason the Fed really wants to move, they want to uninvert the yield curve and really send a strong signal to the markets that they are serious about policy.
Yeah, let's talk about what the economy is doing, because we continue to see these warning signs, Yelena. This Fed recession odds provided by the New York Fed on the GTV chart on the Bloomberg showing that we're past that 30% odds of recession. And every time that's happened, we have seen a recession follow since 1967. But we've really been getting some mixed pictures about the U.S. economy, right? So what should we be paying attention to?
So I think the indicator that you mentioned is really based on, again, on the yield curve. So, QE policies and demand for longer-term assets is really depressing the longer portion of the yield curve. So, the signal from this indicator could be a bit distorted. But, yes, there are some risks to the economy, and Chair Powell mentioned a few of them. Business investment, housing, these, sectors are not doing quite well. But at the same time, the U.S. consumer is doing really well, and that is the core of economic growth in the United States. It's a domestically oriented economy, and as long as the consumer remains healthy, we will probably not face a recession.
Ed Stringham, what about the issue of wages and inflation, which Chairman Powell addressed? Our own Mike McKee has talked a lot about the Amazon effect on how the economy is shifting. How do we explain what's going on right now?
So we've got record low employment, which is just fantastic. That's starting, as Powell said, people are starting to be brought into the labor force who were formerly just not in the labor force at all, including lower skilled people. He said people are now training some of the lower skilled people. That's going to be showing up in increased wages in the long run. You couple that with technology, Amazon, we have a lot more goods. Consumers are a lot better off now than ever before, and that's fantastic. But one thing Powell mentioned, which I think is important, is the trade tensions and how that is actually, they call it a cross current. I would just call it a negative on the economy, and that's potentially dragging things down. They're now engaging in what they call accommodative policy to say, well, look, because of these other bad policies in the global economy, we're going to try and potentially counteract that. I'm not sure that's actually, from an overall perspective, a good idea to be actually hiding problems, because the more we hide problems, if things start coupling, it's going to actually eliminate ability of people to observe what's actually going on in the economy.
Yeah, Ed, to your point, when it comes to trade policy, there has been so much uncertainty, right? This GTV chart on the Bloomberg showing you monetary policy uncertainty right there, the line in yellow, but trade uncertainty just spiking, the line in white. So if Yelena, as she said earlier, it's all about the health of the American consumer, when are we going to see consumers taking a hit from higher tariffs?
Oh, certainly. It's the consumers who pay. It's also the American corporations and global corporations who pay. Taxes, basically tariffs are taxes on production, whether that is steel, aluminum, electronics. That's going to hit the consumer's pocketbook. It's also going to hit the corporation's pocketbook, which will show up in their stock prices. So there's been a lot of uncertainty disrupting supply chain throughout the entire globe. Certain industries, soybeans, they're getting totally hit. They can't actually sell to the same extent they could. And even just smaller products where an American corporation will design a bag here, and now all of a sudden they can't have it assembled by a Chinese company because it's too expensive. That's really going to be hitting all corporations, even very small ones.
Helpful insight on a developing story. Ed Stringham, thanks for your time, president of American Institute for Economic Research, and to Yelena Shulyatieva, senior U.S. economist for Bloomberg Economics. Thank you to both of you.